management of Suryoday Small Finance Bank joining us on the show. We have Mr. R. Baskar Babu, who's the MD and CEO of Suryoday Small Finance Bank. Good morning. Thank you so much for joining us on ET Now. And firstly, your income has actually grown well. Your NII and other incomes are higher, but on quarter-on-quarter basis, your interest income has actually dipped. Could you tell us why is that? Was the reason for this dip coming in? And also, where do you see your NIMs stabilizing going ahead?
There has been a good momentum. There has been an interest dip in this quarter, the last quarter, specifically in terms of one-time reversal of interest capitalized on account of restructuring portfolio which you did. There's approximately around 25 crores. And that's the impact that you really see in terms of it coming down compared to the previous quarter. Otherwise, it would have been higher, around closer to 25 crores, almost flat sequentially.
Mr. Babu, you've increased provisioning against bad loans quite sharply in the quarter. Is this because you're seeing significant stress? And we're just wondering, have you provided adequately, or do you think that this higher provisioning will continue in the near future?
So we split the portfolio into two. The one that got created in inclusive finance prior to COVID-2, which is June of 2021, and post that. The 2,000 crore portfolio which we built post that is near 99%, 99.5% of the collections, behaves as well as it would have been in the pre-COVID portfolio earlier. The portfolio created pre-COVID, which went through COVID-1 and COVID-2, we are pretty clear that we will kind of clearly state the problem, understand the problem, and kind of solve it. The last quarter focus was in terms of reaching out to the customer. As customers are coming out of the negative impact of COVID-1 and 2, we have seen a drastically positive behavior in terms of customer paying even after not paying continuously for a period of 6 to 8 months. But the key trigger is in terms of getting in touch with the customers. So that was the focus of last quarter. We did fundamentally all the things that we'll have to do in terms of making sure that we have a very robust FY23. And that's the reason we did an accelerated provision of closer to 46 crores. While our gross NPA is at 600 crores, closer to 35% of the customers continue to pay. So the intent is to really get them back, one, into the regular customer and make them customers all over, good customers again.
Right. Let's shift focus now to growth. And you've seen actually reasonable growth in Q4 as well as in FY22 as a whole. What's the focus of the bank going to be going ahead? What kind of growth numbers are you actually penciling in for FY23?
FY23, we are looking at anywhere between 25% to 35% growth, more towards the upwards of 30 rather than towards 25. We're building the business fundamentally on two counts. One, the inclusive finance customer, we have around 18 lakhs of them, of which around 12 lakh customers are very good customers. And these customers do graduate into various products or already have graduated, but we have not funded them offered a home loan or a two-wheeler loan or a used commercial vehicle loan. So focus on the existing customer, not only for microfinance loans, but also for the other products which are far more secure. So when our product diversification happens, it is not necessarily out of a completely different customer segment. The second one, there are certain products where we have to build on a product-centric basis, which is used commercial vehicle funding and affordable home loan and secure business loan, which will not be happening out of our current existing microfinance or inclusive finance customers. So that business is picking up at around close to 50 crores of disbursements per month. And at the current pace of scale, it will be closer to around 100 crores towards as we kind of complete FY23.
Okay. I'm just trying to understand. You're seeing a change in the interest rate cycle. As a segment that you operate in, a lot of the people in that segment are going to be very sensitive to increase in interest cost. Do you anticipate that there's going to be an impact on demand as rates go up?
Well, we have excess liquidity of close to 1,200 crores. And overall, our cost of funds today is sub 7%, just a little less than 7%. So we don't need to really do any except for borrowings over and above what we have for the deployment for 6 months. And we have a 40 basis points increase also. We are kind of observing ourselves without increasing the pricing to the end customer, specifically in terms of the inclusive finance customer. So we don't really see any impact of the current hike, but have kind of the hikes were to continue to happen. Probably we will try to kind of keep the impact much lower to our end customer and partially absorb ourselves.